Welcome back. Now, on a month-on-month basis, the Sacci BCI showed a slight improvement of 0.9 index points in May to 115.8, driven by the stronger rand exchange rate, higher share prices on the JSE, and high US dollar, gold, and platinum prices. Albeit a small month-on-month improvement, it is worth noting that at this level, on a year-on-year basis, the index is 8 index points higher. Sacci President Mtho Xulu joins us for greater perspective on the BCI trajectory. Mtho, thanks so much for your time this afternoon. So, as mentioned, looking at confidence on a year-on-year basis, there is a big improvement. Last year, around the April-May period, there was nervousness around the national election. So it only makes sense that we're seeing that playing out, right? Then things slightly different on a month-on-month basis, a marginal uptick between April and May. Would you say that the level of confidence among businesses this year has remained fairly the same, despite, we had that uptick in February, but from February, it just seems like it's remained the same?
Good afternoon. Thank you very much for having us. Yeah, no, your analysis is correct. Year on year, obviously, we are coming somewhat of a lower base because of the anxiety that we were facing as we were going to the elections. But in this year, you would understand that the first quarter of the year, the highest number was in February. And since then, remember, then President Trump took office, and there was all the scaremongering about how we're going to approach the world. The budget was stalled. There was also problems with the tariff announcement. So from February to April, there was a lot of anxiety in the global economy. And South Africa obviously also nervous around their own domestic budget. So we may say that this year it remained flat, but we were largely scared by the global politics of the Washington and obviously our own domestic problems with national treasure.
And what was, hampering confidence in particular during the month of May, considering that we got through the budget impasse and we also saw the meeting between President Trump and President Ramaphosa?
Yeah, so obviously these numbers are lagging. You would know that the budget itself was a function of the month of May, and the Oval Office meeting was also in May itself. So we would anticipate that in the next sprint, the confidence may start shooting up. But what you have now, as we say in the statement, is that partially of the confidence now was driven by the fact that the tariff announcement actually had a softer landing. It was not as scary as it was. And obviously, there's some of the efforts that were made in terms of making sure that we understand the budget, even though that sentiments are not clearly in these numbers. There was a sense that indeed budget 3.0 was going to go through. So I think in the next iteration, we'll see a fuller appreciation of the changes with our U.S. relationships and what the budget means. But yes, as you know, from April to May, there was a small uptick, but the lagging numbers are yet to fully appreciate what happened in May.
And Mtho, it's been interesting to see the divergence between what analysts call soft data and hard data. While confidence seems to be stable, seems to be recovering over from last year's lows, we haven't seen that on the ground. I mean, we can talk about those Q1 GDP numbers. We can talk about the unemployment numbers we've also been seeing this year. Just your assessment on the divergence we've been seeing there.
Yeah, look, and thanks for that question, because you'll see in our print, that's one of our biggest problems, that we say that even though you may talk about a confidence uptick month on month, it's actually largely driven by the financial indicators. So that is the share price, the exchange rate, and obviously the dropping inflation. But that is not really the real economy. If you look at the business indicators in the real economy, manufacturing is down, tourism is down, imports are down, infrastructure and building plans are down. So it shows that the real economy, where we're supposed to be creating jobs, driving wealth, creating fixed capital formation, we are still lagging behind. And I think that's where we need to focus on. We need to be able to drive and improve business activity so that our manufacturing sector improves. We are still able to attract the tourism numbers, vehicle sales, infrastructure numbers, and other industries that are able to work harder. Because exchange rates are important, share price is important, but the most important thing for South Africa is economic activity and actually job creation, which is not created on the stock exchange, but rather on the shop floor and in the different pockets of our economy.
And what have you made on what we've been seeing on the consumption side of things? It does seem like households are holding up well. You mentioned, lower inflation. We've also seen some of those interest rates coming through. And we've also seen that play out in figures like retail sales. And you touched on those new motor vehicle sales.
Yes, the consumer has actually been very resilient in South Africa. I think the drop in interest rates with lower inflation, that's very positive. You'll see that in our print, private sector borrowings remained neutral, meaning that we still have a very healthy credit market in South Africa. Consumers obviously still walking a very tight rope, but are not worse off because it is interest rates going down, and we are calling for more interest rates to be cut. And but sometimes we also find that consumers are moving sideways. So you'll see in our trade forecast and our trade activity index, vehicle sales are also moving towards second-hand vehicles or cheaper vehicles. So the consumer is moving around, but fortunately, with lower inflation, it also does allow for consumer confidence to remain constant.
And it's also, or rather, at the end of the day, right, to see that real growth in the economy, we need those speedy reforms to start coming through to boost activity. Now, we've seen a steady turnaround in Eskom. Things have been slow when it comes to Transnet. Mtho, just your assessment on the progress that we have been making. Earlier this week, we also heard from government about that World Bank loan that is supposed to be used to boost those reform initiatives.
Yes, look, I think we've done considerably well on the three major areas of reforms, energy, logistics, I think also the level of safety of property and people in South Africa. And of late, we've also added the issue of water infrastructure and data connectivity. I think we've done well in opening up the energy market. Transnet itself has made a lot of bold pronouncements on private sector participation, even on contentious lines such as coal and manganese lines. So those reforms are actually ticking up fairly well. But I think coupled with that, you also need to have real investment in the economy. So when you talk about reliable energy, as the reliable energy that we found with the reforms actually translated in people opening up new factories and Eskom being able to disperse new power. Eskom is working very hard now on grid access, making sure that there's connectivity and price stabilization. So the idea is that once the reforms start taking shape, like they are in energy, they need to be followed through by new factories that are able to connect to the grid. And ultimately, when you produce something, be able to put it on logistics more reliably. And obviously, you can't move away from the fact that every district in this town and this country is an economy. So we also need to make sure that local infrastructure and local licensing and decisions do actually give confidence for people to be able to invest in businesses and ultimately we have a market that can consume it. So reforms are taking shape, but the idea that is the private sector really following through on the opening up and the reliability of energy and other things that we are hoping that the reforms will achieve.
All right, Mtho, thanks so much for your time and just taking us through your analysis of that BCI print. That was Sacci President Mtho Xulu.